So
So you guys are feeling bullish.
oh, absolutely. It's just relax. It's all coming our way. And I mean, and this is without something, quote, without an accident, without something, quote unquote, breaking. I mean, I think there's a high probability that sometime in the next 18 months, something serious will break, like the stock market or whatever. And, the bazookas will come out.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Macro legends James Lavish and Larry Lepard discuss why the Fed is trapped, a debt bomb is ticking, why Bitcoin will outperform gold, will the Fed will allow a recession, and whether Bitcoin to $100,000 in Q4 2024.
First of all, great uncertainty is not great for markets. Markets hate uncertainty. And so with Bitcoin, you're definitely sensing some uncertainty here. With, we saw the Nikkei was down almost 5% last night. It's like, are we going to have another, yen carry trade issue, or is liquidity actually being drawn out? Are we actually heading into a recession that we're going to have to stomach first? There's a ton of trading capital in Bitcoin, and they're moving around this thing, and it's not that big yet. So $1 trillion asset is nothing. It's a fraction of a percent of the total investable assets in the world. When you have $900 trillion of investable assets in the world, and you've got an asset that's less than $1 trillion, yeah, it's going to get whipped around, especially when it's been the tip of the wrist spear for so long. So that's one thing. But long term, and the reality is, and Sam did a great job with Lynn Alden on this, and studying this, and it was in Bloomberg actually this weekend. They quoted the study that Bitcoin is highly correlated to the long term growth and liquidity, and so when you have money supply expanding over the long term, Bitcoin will follow that. It may not follow it week to week or even month to month, certainly not day to day, but it will follow it long term. And so if you just pull back and you just eliminate all the noise and you hear nothing else from this conversation but this, just remember that as Larry said, central banks are trapped. Sovereigns are trapped. They have no choice. We have so much debt. We have so much leverage in the world that we have no choice but to build on that leverage, expand on that leverage, expand on the money supply in order to keep the charade going. And Bitcoin will ultimately benefit from that even more than gold.
Natalie, I think it'd be helpful to give you some historical perspective. This reminds me very much of 2019 and 2020 when Bitcoin was kind of stuck in the 5s and 10K range, and gold was stuck at 1365. And gold broke out first, well before COVID happened or anything else. And then COVID happened, and then Bitcoin just came racing by, and so gold was up in that event. Gold was up, 50, 60, 70%. Bitcoin was up 300%. So to answer your question, to allay your concerns, the year's not over. And I'll say it here first. I think we'll see six figures this year, this calendar year. Yeah. And I think James would agree with us because he does a lot of good technical analysis. If you look at it, there's a bull flag forming with a downward slope. And what is it, James? 73?
Yeah, it's been forming for months now.
Right. And when it breaks 73, it's going to squirt to 100 like lickety split, don't you think?
Yeah. So if you pull up that flag, that's about right. And it's, once it gets through that $70,000 level, it's going to have, like right now, where the flag, the trajectory of it is about 66,000. If it breaks through there, it's kind of interesting here.
Bitcoin declined by 8.3% between September 30 and October 1, reaching a two-week low of $60,207. Despite a modest recovery to $61,300 on October 2, Bitcoin's price remains 16.6% below its March 2024 all-time high, whereas gold and the S&P 500 are each within 2% of their recent record levels. Given Bitcoin's underperformance, one might expect traders to adopt a bearish stance. However, BTC derivatives metrics suggest otherwise. Some analysts argue that socio-political uncertainties could negatively impact its short-term price. Historically, Bitcoin tends to outperform other asset classes following major events, indicating potential resilience despite current market pressures. On September 17, BlackRock published a report titled Bitcoin, a unique diversifier, highlighting that BTC's fundamentals differ from traditional assets. The asset manager emphasized Bitcoin's scarcity and decentralization as unique features and advised clients to view it as a flight to safety option in terms of fear and around certain geopolitically disruptive events. Tensions in the Middle East intensified after Iran launched ballistic missiles at Israel on October 1. According to CNBC, the attack was in retaliation for Israeli ground forces entering southern Lebanon to target an Iran-backed militant group. U.S. National Security Advisor Jake Sullivan reportedly described the recent actions as a significant escalation by Iran. Market uncertainty, which adversely affected Bitcoin's price, was also fueled by the upcoming U.S. presidential elections in November. Democrat Tim Walz and Republican J.D. Vance participated in the vice presidential debate on October 1, but the event did little to alter the trajectory of an exceptionally tight election race, according to Reuters. Additionally, investors adopted a more cautious approach after automaker Tesla reported third-quarter deliveries slightly below market expectations, resulting in a 4% decline in its shares. However, it is noteworthy that Tesla's stock appreciated by 20% over the past 30 days, driven by the anticipated robotaxi event on October 10 and positive sales data in China, as reported by Yahoo Finance. Under this scenario, one would have expected Bitcoin investors' sentiment to deteriorate. To assess how whales and arbitrage desks are positioned, one can compare the current demand for leverage with that of the previous week. Whales and market makers favor monthly Bitcoin futures contracts due to the absence of a funding rate, which causes these instruments to trade at a 5% to 10% premium relative to regular spot markets to compensate for the longer settlement period. As of October 2, the Bitcoin 2-month futures premium has remained near the 7% level, slightly up from 6% the previous week, yet still well within the neutral range. Furthermore, traders exhibited less optimism regarding Bitcoin's price on September 24, when the indicator dipped below the 5% threshold following a rejection of the key $64,000 level.
All right, can you all see this?
Yeah.
All right, so this has been a bull flag that's been forming for months here. Okay, this is the daily. So if you go to the weekly, it's easier to see. But this has been forming for this long. Here's the flagpole right here. After we had the ETFs approved and we had that sell off, which was a fake out. You had this flagpole created, and now you have lower highs and lower lows that continue as you consolidate through here, right? So now, as we've consolidated, we keep consolidating. You could see just this last week, we bounced right off that flag. I mean, it's just incredible. We bounced right off of it. And it's like a self-fulfilling prophecy that traders look at this and they watch this and they say, okay, it's not quite ready yet. And so now here we are this week, starting today, we're down, But once it breaks through this level, which is about 66,000, then the next level is the all-time high. And that all-time high is what, 72 and change?
73-ish.
Yeah, 72,000. So once it breaks through that, then it's price discovery, and that's it. And you're kind of off to the
flags typically fly at half mass, so you add another 20 points, 24 points to that, and you easily get to 80, high 80s, low 90s, and they'll overshoot probably into the 100,000 range. So
you guys are feeling bullish.
Oh, absolutely. It's just relax. It's all coming our way. And I mean, and this is without something, without an accident, without something, quote unquote, breaking. I mean, I think there's a high probability that sometime in the next 18 months, something serious will break, like the stock market or whatever. And, the bazookas will come out.
On the 1st of October, the U.S. spot BTC ETF also recorded $242.5 million in daily outflows, the highest since early September. This further underscored crypto investors' risk-off approach as most switched to gold. The sell-off wasn't surprising given BTC's risk-on status and recent strong positive correlation with U.S. stocks. Per BTC Pearson correlation, BTC has shown increasing sensitivity to U.S. stocks since July. That said, Quinn Thompson, founder of macro-focused crypto hedge fund Lecker Capital, claimed that the escalation was a complex play that could influence U.S. elections. Nonetheless, he believed the tensions would taper off in the short term. But if I had to bet on it, I would guess that today's situation blows over in the near term, with lots of saber rattling and barking similar to recent months. QCP Capital echoed a similar short-term potential impact of the tensions. It said, Middle East geopolitics will steal the limelight for now, but the shallow sell-off suggests that the market remains well bid for risk assets. If Thompson's projection plays out, BTC and the overall market could rebound soon. In the meantime, $58,000 was a key level to track if the sell-off compounded and BTC broke below $60,000. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.